Welcome to The Explainer. Today, we're diving into a really important topic: how to build a rock-solid disability safety net using the Principal Income Protector policy. We're going to break down exactly how this policy works, why its highly customizable architecture is so different from those off-the-shelf plans, and why you absolutely need an expert broker, specifically how Diversified Insurance Brokers shops the market for you to navigate the fine print. Because, let's be honest, nobody wants to spend their free time reading insurance contracts, right? But getting this right, it's absolutely crucial. Let's jump in.
So let's kick things off with a critical question that every single hiring professional needs to face head-on. Seriously, take a second and think about this. If, heaven forbid, an illness or injury completely halted your ability to practice your specialty tomorrow, how long could your savings actually last? How many months could you keep the lights on, pay your mortgage, and fund your retirement before the well completely runs dry? For most of us, well, that number is a lot smaller than we'd like to admit. You've spent years, maybe decades, building your expertise. Your income is the engine driving your entire financial life. And protecting that engine, it's just non-negotiable.
All right, moving into part one, the income protection gap and the illusion of group coverage. We really need to bust a dangerous myth right now, which is this idea that your employer's group long-term disability plan has you fully covered. It's so common, right? You look at your benefits package, you see long-term disability, you mentally check that box, and you move on. But there are three hidden traps here that can be absolutely devastating if you actually ever need to file a claim. First up, group coverage usually only looks at your base salary. It totally ignores bonuses and commissions. So if half your take-home pay is tied to production, a huge chunk of your livelihood is literally left completely exposed. Trap number two, taxes. If your employer pays the premium, those benefits are generally taxable to you. So that 60% income replacement you thought you had, suddenly it feels a lot more like 40% when the IRS takes its cut. You're looking at a massive pay cut at the exact moment your medical bills are peaking. And the third trap is portability. That group coverage vanishes the second you leave that job. It's a temporary umbrella, for sure. Definitely not a permanent roof over your head. This brings us to Section 2. Meet Principal Income Protector and the Architectural Approach to Insurance. So, enter Principal Income Protector. This is definitely not your generic run-of-the-mill product. Think of this contract like a giant modular blueprint. The base policy, that's just your foundation. From there, you have to deliberately pick and choose your building blocks to actually finish the house. And the massive win for you as a consumer here is that you aren't forced into some bloated, expensive package full of features you don't actually need. Instead, you get to build a tailored fortress perfectly customized to your exact income stream and your personal risk tolerance. You are the one holding the blueprint.
Okay, on to Section 3. Crucial riders you can't skip. Basically, our essential building blocks. All right, the absolute most critical block you need to add is called the True Own Occupation Rider. This is a 100% mandatory provision for high earners. Let's say you're a surgeon, for instance, and you develop a hand tremor. Obviously, your operating days are over, the fine motor skills just aren't there anymore. But with True Own Occupation, you could take a super lucrative job teaching medicine or maybe consulting in a completely different field, and this policy will still pay out your full disability benefit. It protects the exact, highly trained skill you spent decades perfecting. Honestly, the emotional and financial relief that provides is just incredible.
Now, here's the massive gotcha reveal that catches so many people completely off guard. Principal's standard base contract, without that rider we just talked about, actually stops paying if you take a different job. The standard fine print basically says, hey, we'll pay you if you can't do your job, provided you aren't working anywhere else. So if you take that consulting gig without this rider, your benefits just vanish. Poof! That makes adding the True Own Occupation rider an absolute necessity. It is not just a fancy luxury add-on, especially when we're talking about evaluating your long-term career security. Another block you literally must include is the residual disability rider. Why? Well, because total catastrophic disabilities, actually, scratch that, they aren't even the norm. Most claims are partial. Imagine a physician who develops a bad back and has to permanently cut their patient volume by 40% because they just can't physically stand in the OR for 10 hours a day anymore. Without this rider, a doctor who can still see some patients gets absolutely nothing from the base contract. Zero. The residual disability rider ensures you actually get a proportional benefit when you suffer a partial loss of income. It keeps your financial engine running smoothly, even if you have to shift into a lower gear. Next up, we have elimination periods. Don't let the jargon confuse you. Think of this simply as a deductible measured in time rather than dollars. These range anywhere from 30 days up to a full year. So how do you choose? Well, please don't just guess. You need to run the math on what your liquid savings can comfortably absorb. If you've got enough cash sitting in the bank to float your current lifestyle for 90 days without breaking a sweat, then go with a 90-day elimination period. It is hands down the most efficient way to lower your premium without sacrificing your actual long-term safety. Moving right along to Section 4, let's look at who Principal fits best, our ideal candidates.
So, Principal is a fantastic fit for a few very specific scenarios. Number one, if you're layering this over a group policy to cover that taxable gap and that bonus income we were talking about earlier. Number two, if you're a medical or dental resident. This is a huge deal, guys. They offer a massive training discount that typically locks in for the life of the policy. Getting in early secures that cheap rate forever. And number three, if your income grows in large, sudden steps, like, say, finally making partner or opening your own private practice. Principal has these really unique income-triggered increase features. It basically lets your coverage grow seamlessly right alongside your paycheck, and you don't have to jump through massive underwriting hoops every single time you get a raise.
All right, Section 5, the broker difference, and why you absolutely must shop the market.
Here's the thing, because building this architectural policy means choosing exact riders and navigating incredibly dense fine print, you absolutely should not try to DIY this. No way. This is exactly where an independent agency like Diversified Insurance Brokers steps into your corner. They handle 3 vital steps so you don't have to. First, they assess your unique risk and your liquid reserves. Second, they configure a perfectly matched specification of those crucial riders, like the true own occupation and residual disability we talked about. And third, because they are independent, they take your specific profile and shop it across over 100 different carriers. This ensures you are getting a true apples-to-apples comparison. They do all the heavy lifting to give you peace of mind and make sure you aren't stuck buying some hollow policy.
Always, always keep this rule of thumb in mind. The cheaper quote is very often cheaper because something is missing from it. For example, let's say carrier A bundles the true own occupation definition right into their base price, but Principal prices it as a separate rider. If you're just glancing at the top-line numbers, Principal might initially look artificially cheaper. It's a really dangerous illusion of safety, and that is exactly why the experts at Diversified Insurance Brokers read the illustration line by line. They do it so you don't have to find out the hard way that you bought a cheap, empty policy when it's finally time to make a claim. So, I want to leave you with a bit of a challenge today. Go pull your current policy out of the digital drawer, read the actual literal definition of disability in there. Seek a second opinion from the pros at Diversified Insurance Brokers, and ask yourself a really hard question. Is your income actually protected, or are you just covered in theory? Thanks so much for joining me on this explainer. Go protect your biggest asset today.